Hello from Trend Signal for a review of the data and events the week beginning the 4th of December. Headlines on Monday morning are all to do with Brexit, as it has been for some time, and also about Trump, as it has been for some time. Re Trump, it looks like he's managed to get a bit of a win with his tax cuts that look like they will be enacted into law. Before we go into the details, let's have a quick look at the markets from last week. Two sort of opposing performances, as it were, in Europe. The FTSE down 109, DAX down 198, whilst in the US, not surprisingly, on the back of those proposed tax cuts, the Dow Jones a whopping 673 points last week, 2.86%, largest or best performance or weekly performance this year. So quite significant. S&P not to be outdone. That was up 40 points. Nothing like the gains in the Dow though. Up 1.5%. The Nikkei 268 points to the good as well. That's 1.2%. But certainly the Dow, that was the one that outshone all others. Reason being, it's got a number of financial companies that typically pay a lot of tax on their operations in the US. So not surprisingly, financial companies, the likes of Travelers, Goldman Sachs, Visa, American Express, all rallied. As a sector, the financial sector put on, 5.25%, 5.5% last week. Telecoms also benefiting hugely from the tax cuts, had a gain of 7.1% on the week. There were losers. We might have mentioned it last week, but the rotation out of the tech stock carried on last week, certainly through Thursday and Friday, which saw the FANGs, as they're called, the likes of Facebook, Amazon, Netflix, Google, etc., fell another 1.5% on Friday as the rotation continued. The news was eventually confirmed in the early hours of Saturday morning as the Senate voted 51 to 49 to overhaul the tax system, the tax code system, I should say. Looks like this tax bill will be put to Trump at some stage for signing. They're going to be cutting corporation tax, quite significant actually. It'll be the lowest rate for a generation and a more modest cut in individual tax rates. Curiously, though, in the wake of this, Trump decided to try and snatch defeat from the jaws of victory by lambasting the FBI over the investigation into Russian meddling in the U.S. presidential elections, which has raised concerns from all sides, Democrat and Republican, that he is attempting to obstruct the investigation in some way. He just can't leave that Twitter alone, can he? Let's have a look at what data events are coming out this week. It's non-farm payroll week, but normally would be quite a busy week. But really, when you strip out the ADP and non-farm, we're just left with the services sector data. But anyway, let's just go through it from Monday. Construction PMI are in the UK, the construction sector continues to struggle, although 51.2 is above 50, so it continues to expand, if only just. We have the Reserve Bank of Australia statement on Tuesday early morning, so we'll get into front of our screens to see the results of that. Services PMI data out in the UK, 82% of our economy is based on services, so it's an extremely important number. A bit of a pullback from last month's 55.6, expected 55.2. Same thing in the States, the differently named ISM non-manufacturing PMI data, which basically means services. Very, very strong number. Slightly similar to the UK, slightly lower than the previous month's number, but a hefty reading at 59.2. So incredibly buoyant US services sector. We then have the prelim reading on the employment picture by ADP, the private payroll data services company. That's expected 191,000 new jobs last month as opposed to 235. But still a pretty decent number, but it is notoriously erratic. OPEC data, oil data, I should say, weekly crude oil inventories. The drawdown continues as the OPEC cuts continue to bite, really. 3.4 million drawdown last week, expecting another drawdown this week. Mario Draghi talking at the Bank of International Settlements in Frankfurt, 4 o'clock on Thursday, as with all heads of central banks. When any of them speak, the market has to listen, or at least be careful, and it will react to anything that Draghi does say that is of market focus. And then the main event of the week for this week is non-farm payroll. But before we get that, we have our own manufacturing production here in the UK. A bit of a pullback from last month's plus 0.7. We're looking for a small dip, minus 0.1%. Non-farm payroll, important data, one of the most important on the week. 261,000 was the previous month's reading. We're expecting 200,000 new jobs in November, which is still not bad. Certainly nothing like as bad as would be needed to put the Fed off from raising rates by 0.25% later on this month. And that's it. Thank you very much for listening. All the best. Bye for now.